In this video, billionaire investor Ron Barron, CEO of Barron Capital and a seasoned Tesla investor, discusses the recent drop in Tesla's stock price while noting it has still increased over the past year. Barron underscores the importance of long-term investing and highlights Tesla's innovative approaches, particularly in production capabilities and the transition towards robotic cars. In addition, Barron believes the new models and services will unlock substantial growth opportunities for Tesla in the coming years.
Intentional to try to slow down the economy, get rid of inflation. First term president, the first thing you do is try to do things that are going to be unattractive to your constituents, if you're running for election. But you do it now, get it out of the way, and then a year and a half from now, then things will look better. A year from now, things will look better. But stock prices, I've been saying for a little while now, I can't believe how cheap they are. Those are the things that we're looking at.
So you're on a buying spree right now?
I didn't say I was in a buying spree. I just said I can't believe how cheap things. I own a lot of things. I'm a long-term investor. It's interesting. I listened to your analyst this morning on television, and you were talking to him about Tesla.
Gene Munster.
Gene Munster. Mm-hmm. And you were asking him, great shirts he has all the time, I guess. But you were asking him about, what he thought about Tesla. And I said, well, for a 4-week horizon?
Yeah.
A 4-week horizon. So that was his mindset, a 4-week horizon. And then,
I think he did say for a 4-week you could see some volatility, but longer term he was a fan.
Yeah, but I mean, he was focusing on 4 weeks.
Right.
And basically, I met Elon in 2010, and it took me 4 years before I invested anything. And between 2014 and 16, invested $400 million, and we made $6-7 billion on that. And then we invested in SpaceX in 2017 on. About $1.1 billion. That's now worth about $4.5 billion. I think that over the next 10 years in SpaceX, we can make 10 times. Elon thinks we're going to make 30 times. In Tesla, I think we're going to make, from where it was $1.1 trillion, I was thinking we would make 4 times over the next 10 years. I think we're going to make more than that now from these prices.
Ron, so there's 2 issues, I think, going on with Tesla right now. I'm curious where you land. There's the fundamental issue, which is just what's happening in the economy, how many people are going to buy cars, at least the products that we know about today, right? When you think robo-taxis develop, when you think new cars come out, all of that kind of stuff. That's the actual fundamentals of the business. And then there's the multiple question, which is really a market psychology question to some degree. I mean, they're related, hopefully, but there's sort of, as I look at it, sort of 2 issues. There's multiples are coming down in everything. But then there's the actual fundamentals of the business. So you're thinking a year out, it's a lot better. And my question to you is, what happens in a year from now to the fundamentals of the business? Meaning, are they selling more cars? Do you think that they're going to launch new models that we're going to see? Do you think the robo-taxi product actually does launch and it's material to the business during that period? What's the sort of catalyst?
So fundamentals. So I want to get one thing straight, though, first of all, that we're investors in people for the long term. Question everything. Don't take anything for granted. Investing for the long term, exceptional, takes time. We look out years. Own it. We own things. We don't buy and sell things. As far as the fundamentals go, so I want to make sure we talk about other people, too, other than Elon.
I'm not talking about Elon. I'm just talking about the business.
A major guy. So his business. I mean, you wouldn't have a business without him. You wouldn't have EVs without him. You wouldn't have autonomous driving without him. You wouldn't have the internet for every inch of the planet without him. You wouldn't have rockets that you can use without him. I'm an unbelievable engineer. And the fundamentals of the business, this is an inflection point right now. The last time I was on, the stock price was 160. And I was telling you that I thought that this was a really interesting time to buy because the software was working way more when they have cars. You have to have $150,000, $200,000 car. Our car is $35,000 car, and it's software. It's software and cameras, and so it's going to drive just like a person, and probably better, way better than a person. Each new series of introductions is dramatically better than the last one. So fundamentals, the changes, is that. So historically, what what Tesla did is they built a facility in China. They bought this junky place that was bankrupted by Toyota and General Motors in California, and all the union workers were fired. Hear that, Joe Biden? All the union workers were fired. And then every single one lost their jobs. And then we take over this plant, and they go look at it for the first time after he buys this thing for distressed price. They spent $1 billion on it. It cost us $20 or $30 million to buy it. And then they go to see it, and Elon says, yeah, let's go look at this place we bought. And it's a huge facility, 5 million square feet. And they can't get into it. They finally get inside, and they go with one of his friends from college who's a director, and they open the door, and they look inside, and it's dark and dismal, and it's drugs and prostitution and it's crazy stuff inside of that place. And they look around, and it's incredibly dark, and Elon's looking around, and he says, well, what we're going to do is we're going to take off the roof here, we're going to make it all white, and we have the production line running there. And so they learn how to build it. And it was making 400,000 or 500,000 cars a year, 600,000 cars. Then they go out and they build a facility in Shanghai. And it cost them $7 billion to build it for 1 million cars. And that factory was making $15,000 in profit a car, investing $7 billion, making $15 billion a year. And then price cut after price cut after price cut. Chinese are incredible competitors. I don't understand how American car companies will survive, except for Tesla. And so I'm going too long.
But
no.
Ron, let me just ask
But anyway,
you.
the fundamentals are changing. Instead of making $5,000 or $6,000 or $7,000 a car, you're going to robo-cars. And every time they have 1 million cars that they make, that they keep, that are $30,000 a piece that last 1 million miles, those cars are going to generate 50,000 revenue miles a year. So before the model was they're making $7,000 in profit a car, $6,000 in profit a car, 1.8 million cars. Now all of a sudden you're keeping the cars and making them robo-taxis. What that means is that if you do 50,000 miles a year for a car, those cars will generate 50,000 revenue miles. They'll generate $30,000 or $40,000 or $50,000 in profit per year, per car. So every time you have 1 million cars, you're adding $30 or $40 or $50 billion to $30 or $40 or $50 billion to profits per year for 1 million cars.